Hey, what's going on, everyone? Sal here with a great video that I want to bring to you today about how to trade the RSI the right way. So many of us have a basic level of knowledge when it comes to the relative strength index. Today, I want to talk about a more professional and more powerful way to trade the RSI. You know, in my MBA program now, I'm towards the end, just a couple more classes till I'm done. I'm finding so much more intricate and more knowledgeable ways to trade, and I just want to share that with you. I just want to put it all out there so the next time we come back live, we can really just, get to the meat and potatoes on how we can look at the chart and say, okay, this is what we need to do to make money. And getting this way out there is going to be, I think, another part of that. So for those of you guys who embrace what I'm about to teach you, I think it's really going to change your P&L. It really, really is if you get it. Trading the RSI indicator the right way. First and foremost, I want to thank my sponsors, Black Box Stocks. That's blackboxstocks.us. If you are a day trader, there's no better place for you to be. Awesome chat room, awesome systems. If you're into algorithm-based trading alerts, there's only one place for you. That's blackboxstocks.us. Let's keep it going, ladies and gentlemen. So when we talked about the relative strength index, let's do this brief overview. Every time you've used it, that guy on the screen is the man you need to be thanking. His name is Welles Wilder. By the way, still alive. I think he's in his early 90s now. Lives in New Zealand. He's a former engineer, created the RSI as well as ATR and the ADX indicators as well. I know it's average true range, average diagonal. I don't remember what the X is for. He wrote the book, New Concepts in Technical Trading Systems. Wrote the book in 1978 and has never updated the book. Still sells thousands of copies of the book every single month. He's never updated, sold it for one price, $65. The price has never changed since 1978. A very interesting story there. Top uses for the relative strength index. So people use it to indicate whether or not prices are trending, indicate overbought conditions, indicate oversold conditions, and identify the best entry and exit for the trade. So those are the four primary ways that people trade the RSI, but not everybody does it very well. So here are the 5 ways the masses trade RSI and believe that it works, but I'm going to show you how that's not always fundamentally correct. That they believe that the RSI will generally top out somewhere around 70, right? And that we want to start thinking about getting short or at least exiting long trades at the 70 RSI. I want to show you reasons why that might not be a good thing. They also believe that the RSI will generally bottom out at around 30, and that at this point you want to start thinking about going long or at least exiting short trades and then may possibly going long there from the bottom. Whenever the RSI is above 50, a lot of people believe that that's a bullish indicator. I've wrongly said that many times here on the show, and I'm going to show you why now after getting, again, a more deeper education in this art of trading, why that might not always be a smart thing to do, right? Sometimes it works out, but also a lot of false signals there. So if not, and continuing what I was writing there, find an excuse to get long. That's what a lot of people believe when the RSI is above 50. Whenever the RSI is below 50, that means it's automatically a bearish indicator. If not short, find a reason to get short. Also, not a correct thing. The another and last thing is that a lot of people believe that the RSI is unable to indicate a trend direction because many people believe that the RSI is just simply a momentum indicator, right? Many people believe that the RSI is just for overbought and oversold conditions. That's it, right? This is fundamentally flawed, and we're going to show you why there's a proper and better way to trade the RSI. So let's talk about that professional way and introduce it to you now. That way is done by was created by John Hayden. The book RSI, The Complete Guide, introduced that to traders back in 2004. I have a link to the book in the description. You can purchase it at the website there for $5. There are websites like Amazon that sell the book for like $400, $300, $600. No, you just get the digital version at the link below. Is $5. Here's the book or the author again, right on the screen, the complete guide, and you can get it at the link below. So let's introduce to you what he taught people about how to use RSI. And he taught that the RSI trades in zones, right? That RSI trades in zones. And that in bullish trends, the 40 RSI is the support and that the 80 RSI is the high. This is what he calls the 40-80 theory. In bearish trends, he came to the conclusion that RSI at 20 is support and that 60 is resistance. So that is the 60-20 theory, right? So using the 80-40 and the 60-20 range rules, we can instantly identify the trend the majority of the time with just RSI on the chart. In fact, we can basically not have anything else besides RSI and be able to determine the trend, all right? So if RSI is staying within the 80-40 range, we know that the trend is up. If RSI is staying within the 60-20 range, we know that the bears are in control and that the trend is down. So let's see a visual representation of what he was trying to get us to understand, right? So let's first talk bullish trends, identifying the upward movement in the stock. So as you can see here, again, remembering that 40 and 80-40 is the theory for the bullish, we can see here where RSI now properly labeled their position on the screen in my chart, where you can see now between 40 and 80, right? Look at the positive conviction in the move of the SPY, right? The Standard & Poor's 500 ETF. And as we can see, the only time we really get any kind of downward pressure is when we are outside of that range, right? We're outside of the 40, right? Once we get above the 80, we know that the mathematical basically restrictions limit our ability to continue to go higher above 80. But we understand that even at above 70 RSI, many times, it doesn't necessarily mean the end of bullish momentum, right? So many people believe that 70 RSI is the time to be shorting. You would have been blown out. You would have lost a lot of money if you came into these trades at the 70 RSI thinking that it was time to sell. In fact, it was only more proof of the bullish conditions that the market was in at the time. So as we see here, as we get towards the lower end of that bullish 40-80 range, then that's when we start to see a lot of volatility come in. But as we are in the higher ranges, we're at that 60 or above, 70 above, even touching 80 a couple times as we saw in previous months. We had a very strong move higher, and as we can see here now with the China resistance and trade deals and stuff, we're going out. Now we're basically coming out of that range now, right? So we're going into now bearish territory. But let's stick now to the bullish idea. All right, so here's a new ticker for us, NVDA. All right, so we've gotten out of the ETFs, and let's look at a ticker. And as you can see here, strongly showing that bullish conviction as the stock stays where? In what range is it in mostly? Between 40 and 80 RSI. So that should be 80 over here. You're not always going to get it perfectly, right? So just get as close to 80 as you can if you're using TradingView. But we want to stick between 40 and 80. And when we're looking at a chart, right, and we're seeing that RSI is in predominantly 40 and 80, right, between those zones, we know we're talking about a bullish stock right now, right? So the bulls are very much in control. Prices are going higher. People are buying and accumulating the stock, right? So here we go. And as you can see here, another stock that is now, overwhelmingly bearish now that we are below the 40 RSI and below and outside of that 80-40 range. Micron. Let's talk Micron. Again, I want to get it into your head. 80-40, right? So we're in that 80-40. We're now convinced that, as we see here, strongly within the range, using the 40 as support, right? I didn't talk about that in the previous two examples, but look at how, again, during bullish momentum, 40 is a strong level of support when we're in a strong bullish trend, right? So that's look at the conviction here. Look at the way that people step in to buy the stock every time it hits that 40, right? Every time it hits that 40 and makes a comeback. And again, look, just because you're above 70 doesn't mean it's time to short, right? So just because you hit 70 doesn't mean it's time to short, right? So this is a way that you can step back as a trader and say, all right, wow, all right, so we're in a bullish pattern here. This is where I want to get long as a trader because I'm convinced that this could continue to go higher. So if you're looking at a bullish momentum and for whatever reason at the moment the stock is sitting on the 40 RSI, that's a great opportunity for you to come in and buy that there, right? And as you can see here, history has proven that people who did that were, rewarded handsomely for that decision, right? And as you can see here, MU only fell apart as it broke below that 40 RSI and then started to become a very clear sell signal, right? And then volatility came in, and sure enough, it didn't really get back its strength until it got back above the 40 RSI. So using this again to be able to determine where your proper entry and exit should be. Let's talk about bearish trends now, identifying downward moves into the stock. All right, so here is SH, which is the inverse of the SPY, right? So this is just a clear example, right? This is an ETF that tracks the bear or inverse of the SPY, and this would be a very clear example to show a stock that's in bearish momentum, right? The stock that is very much below the RSI and not going to be going higher anytime soon. And I really wanted to point that out to you guys. SH is clearly in bearish momentum here. So we can look as far as 2017, and as you can see here, sticking below the 2060, right? That 60-20 area here, and it's not going anywhere. And look at the convincing selling that's taking place in SH, right? As this continues to go lower, 20 is where it finds support, and then 60 is where it finds resistance. It's not going anywhere. It's not going anywhere. It's continuing to go lower and lower and lower, and you see here very convincing selling, and a lot of people who, again, don't know how to properly use RSI, and that would be me not too long ago, would have found and tried to buy every single 50 cross here. And as you can see here, that 50 cross would have lost you a lot of money, right? That's a lot of fakes here. It's a lot of faking opportunities here for you to lose your money just because it's crossing over the 50 RSI. And we can see here bearish stocks use the 60 as resistance. So those are actually great opportunities to come in on a short. So when we first look at a stock, we identify the bearish momentum, and we look for that failure on the bounce at the 60 RSI to go and initiate our short position. And as you can see here, that would have been a great opportunity to make a lot of money on this stock, excuse me. So now that we see that change in direction on the SPY, we know now, SH being the inverse, that things will be going higher. So now SH actually showing now bullish momentum as it crosses above the 60 RSI. And if it continues to stay there and go higher, right, even if it comes back to find support at what we said, remember, 40, then that's where we're going to be able to come back in for an entry back higher. But now SH showing that is actually in a bullish momentum, right? So as we see here, popping above that 40 RSI, 60 RSI, that's where the moves happen, right? That's where the money is made coming out of a bearish pattern, is when it crosses the 60 RSI. So it's been now convinced to go higher. So here's where look at those massive moves that happen every time SH pops above that bearish momentum there at 60 RSI. Huge moves being made there. All right. Here's another ticker. It used to be a great American company by the name of Sears, SHLDQ, right? Again, very convinced, right? Very convincing bearish momentum sticking below 2060, right? Sticking below 2060, not going anywhere else, right? A few peaks here and there, but for the most part, staying in that bearish zone that Mr. Hayden talks about a lot. So again, as you can see here, showing in the chart, right, very convincing. And where's the great opportunity for you to come in here on the short? Right when it goes back below the 60 RSI, and every single time there, as you can see, was to be a great opportunity for you to short the stock. So now bouncing back above here, it's bearish momentum still very much in the stock, and as you can see clearly here, a losing stock for anyone to decide to go long here. All right. And by the way, that's another great way for you to be able to notice that it doesn't always make sense for you to come into the stock at the 20 RSI, at the 30 RSI. You've got to be able to identify whether or not that longer term trend is showing a very bearish sign. So you coming in at that low RSI doesn't always make sense. Here's GE. Again, GE 2060, right? Here's 60 resistance. Again, every single time that 60 resistance on that bearish zone is a great opportunity for you to take advantage of a short position. All right. Great opportunity every single time. Now trending sideways, right, as it's trying to hang above some higher RSI levels here. This is going to be very interesting here. Here's the 38 where it is right now. So it's trying to stay above that 40 level here. So this could be an interesting move for the future. But, you know, for the most part, as you can see, the stock clearly stayed from between 20 and 60 and spent a lot of times below the 40, trying to fight and hold on at there at the 20. So not always a great opportunity for you to come in on the low side, again, while the long-term trend is still very ugly. So let's talk about how to day trade this system, right? How do we day trade this system, right? Now, personally, I don't support the idea of using this system as a day trade. I think it's a powerful swing trading system, but yes, it actually does work in a day trading system. Although you must be aware of the fact that there are false signals when we day trade, right? We're you know, we are trading against a lot of noise created by news, noise created by indecisive traders, and noise created by people who have a much shorter time frame than us, right? People who have a time frame of 1 minute, 2 minutes, 30 seconds when we talk about some of these algorithms and some of these bots out here. So first and foremost, go into the trade, identifying where the strength is at in the long-term time frame. So here's the daily chart, right? So we've got both sets theories on the screen. So we've got our 40-80 and then we've got our 20-60. And as you can see here, looking at AMD, the conviction of the bearish move, the bullish move is kind of weakening here, right? It's kind of weakening. So between 40 and 60, we're not as strong. We're a little weak there, but we're still very much in an opportunity zone where the stock could go higher, right? But as you can see here now, rejecting that 60 RSI, looks like this could be turning bearish. So we're weak. Where the bulls have control, but they are not strong. They are not strong, right? So here's the intraday. Now we've zoomed into the intraday level, and I'm going in as close as 10 minutes on the intraday chart, just kind of smoothing it out a little bit and getting those false signals out here. So here's our bearish line, which is 60 RSI, right? We've opened up above that, so we're now scaling in. So here's where you'd actually want to possibly buy this, right? So again, 80 doesn't always mean it's game over, right? 80 doesn't always mean it's game over. It could mean that, hey, this is the conviction of the buying here. And as you can see, if you tried to short this, you got annihilated, right? You got annihilated. So it doesn't always mean time to short. And we showed you that earlier on the longer time frames. And it also falls in line here on these shorter time frames as well. Now, eventually, the bearish divergence comes into play here and eventually becomes a great short. But where does it become a great short? When the stock enters bearish territory, so below the 60 RSI, not the 50 RSI. See, if you would have waited too long, which what a lot of people believe, which is the 50 RSI, you would have been late. You would have been, not necessarily out of the money, because you would have made some money from 50 down to 30 here, but you wouldn't have made as much, right? You wouldn't have made as much, and you would have had to deal with a spike here and there or two. So the real opportunity to short this was actually at the level where the stock broke below the 60 RSI. And you're going to see that on a lot of intraday charts, right? So this is where to play the zones and for you to be able to win. So, again, intraday trading, great way to buy is when it crosses above that 60 RSI. Great way to short is when we get bearish and get below that 60 RSI, right? So awesome opportunities there for you as well. And you can see here coming up above that 40 RSI. It's a great way to be. Doesn't always work out. Again, intraday sends a lot of false signals. Even more accurate on the higher time frame, particularly if you are coming from a bullish or a bullish momentum and just happen to go negative for a short period of time. All right, so to wrap things up, let's take everything we've learned now and make a trade, right? So we're going to make a hypothetical trade here. Let's go ahead and do our best to hide the chart. We don't even have to see the chart. We can just simply look at RSI, right? We know now bearish momentum is 20 to 60, bullish is 40 to 80, right? And we know now what the great entries and exits are. So we don't even really need the chart, right? So tell us by just simply looking, right? I want you to press pause or whatever you got to do, or just keep watching. What do you see in this chart right now, just looking at the RSI? You see a stock that was very much, when times were good, a very bullish stock, right? This was a stock that was very much a very healthy, bullish, convicted move, right? So we see the stock hanging above that 40 RSI, using it successfully as support many times and going higher and higher and higher, right? But now going into the new year, what have we seen now? We've seen some volatility come into the stock right this past month, right? So at once a very much a convicted bullish move has now slowed up. And what we see, and just by confirming it, looking at previous months, we can see where there's been rejections of that 60 RSI, right? So now we're in a rejection of the 60 RSI. Now that doesn't mean that it's bearish just yet. It just means that something here is up, and it could be a great opportunity for you to enter into a short position. This is where you would probably want to do that right here. You would want to do that right here, right now. In fact, you can see here, those rejections are great opportunities for you to come in short and be able to sell on the downside of the trade. Come in short on the fail, sell on the downside of the trade. So you have to see you short that, and then as it tried to, come back and find support, this would be a great time for you to exit, right? Great time for you to exit. Failure of support, this is where you definitely would want to exit as it comes back above bullish territory. But let's take a look here now with the ticker back onto the chart. As you can see, beautiful. Look at that, beautiful. So as you can see here, very much a convicted move for the bulls. But now things seem to be slowing down, right? We're below the 60 RSI now. We've been already rejected of those higher RSI levels. And now this is a great opportunity for you who are interested in stocks like Visa to enter into a short position and hang out here until the stock proves they can get back above the 60 RSI. I'm your boy, it's your boy Sal. This is where you make money by trading in a more professional, a more intricate way, and this is how you're going to be able to increase the value of your account, making smart trades by using methods that have been proven time and time again to be right. Pull up the charts on your favorite tickers, use this method, and I bet things will really start changing and looking up for you. Until next time, take care, everyone. Please subscribe if you haven't already. Till next time.